Welcome everyone to another YouTube live here. Going to do a BTC market update. We're going to be going over Bitcoin, going over from the daily chart. We usually start from the monthly and weekly, but yesterday we dove in and went over the monthly and weekly quite extensively. So we're not really going to be going over that for the next couple of days because there's no point going over a single candle movement. We like to see candle closures. They are significant. So going from the daily onwards, we see that the price pushed up, hit our resistance. Let's just talk about market structure, market flow, what we're seeing right now, and what we could be potentially seeing in the near future here on the daily chart. So we have now a potentially confirmed zone, our anchor point, our first touch point, and then our second touch point, validating this zone as a support. We see his previous level of support and resistance, and we can see support and resistance here as well. So yeah, that is a key zone on the chart, the zone of confluence, because we have not only the horizontal zone but the ascending zone, creating our level of demand right there. So the price is now currently going in a horizontal direction with an ascending support, pushing the price or keeping the price making higher lows. We had a low here, and this is still a higher low. Yes, we did have a higher low, and then we're now currently in a correction, but we can see that this ascending trend line could still be the higher low formation. So if this does break, then obviously we are looking more bearish, and I think we could touch that $7,700 area for a level of support. But if we're able to hold above this zone, I think that we could potentially break to the upside, breaking this descending trend line. But if we break to the downside, well, then we're going to have potentially a move that is going to hit this zone, potentially validating our mid-range $8,200 level as well. So that's the downside potential. For the upside, we do always want to ensure that we are potentially breaking this zone before we look for any swing trades to the long side. A break in this current level of resistance, in my opinion, would not trigger me to enter, because we could have a high here, a wick touch this zone, and then a rejection right back down. I don't want any part of that. I want to see a validation and a confirmation that the bulls are present in the market. And for me, that would need to I would need to see the market break this zone and even potentially break this zone of horizontal support and resistance, as we can see in the past. So definitely looking more shorts at this moment. For the swing trades anyway, for day trading, obviously we can look for longs to maybe make some moves within this consolidation here. But as long as we're able to manage our risk reward and we're able to manage the position sizing, it doesn't really matter amount of the move, because you could just increase your position size if you want more money from a shorter move. But the main thing is understanding the risk on the total portfolio, and then understanding the risk reward that you're aiming to get. And then obviously a win-loss doesn't really matter if you're well, I guess it does matter if you're winning a lot or winning less, but obviously that pertains to the average amount of reward and average amount of risk, which is the risk reward. So going now to a smaller time frame, we've kind of discussed that we have a resistance here of a mid-range zone. Even if we break to the upside, we could get a retest of this area here. But personally, we could be looking for alt, but for BTC, I don't really think that I want to be looking for longs. Even if it breaks this level of resistance, I'm going to remain patient, and I'm only really looking for shorts at this moment in time until we break our descending zone. I think we will get this area validated at least a couple more times here maybe, and then we're able to get the price to break above, retest, and then shoot up to the upside. So we'll see how it goes. We'll look at the smaller time frames. We don't want to get too ahead of ourselves, but we'll go to the 4-hour chart here. So this is the Heikin Ashi candles. We can see that the momentum is still to the downside. Obviously, we got the massive bearish push to the downside after breaking this level of support, and then we've been holding a level of support from this point onwards. So right now, we just hit the high, validating the resistance, having 2 points of contact. So we know now that we have a strong level of demand, because we've seen it respect 3 times, hold the support 3 times, push to the upside, and then validated this area of resistance. So now we're just in a consolidation sideways. And what we're looking for is a potential high probability enter for a long opportunity if the price does come down here, and then we get a descending trend line connecting the lower highs. Once we break that descending trend line in the market structure and VSA and all that stuff, once it's confirmed that we have a good entry, we'll look to enter at the lows here, and then our take profit is going to be high right here, resistance. If we do see a strong bullish push, we may look to leave a little bit on, but at this point in time, that's kind of the move that we're looking for, and we'll discuss that within the 1 hour time frame. But at this point in time, we're just consolidating sideways. This is the 4 hour chart. We'll just zoom out a little bit here so we can see the larger time frame or larger aspect of it, and then we'll discuss what we're looking at right now, and then we'll zoom into what we could be seeing on a smaller view of the candles. But for now, what do we see? Well, right now we saw a strong push to the upside, making higher highs and higher lows on average. We see strong pushes here. But what did we see here? This is a high, right? This is a lower high. This is a lower high. So now we're starting to see lower highs and lower lows. We did see that right here, and we did see that a little bit right here. But they were much shorter and smaller, whereas this one is a lot longer compared to what you see here. It doesn't mean that it's completely going to go further down, but it's just a more significant drop, and you can see, I guess this had quite a bit of sell pressure, but we can see within this consolidation here, we didn't really see any sell pressure whatsoever, meaning we could easily push the price up because there's not a lot of sellers in the market. But right here, we did see a decent amount of sell pressure, as we can see. So then we consolidated further down until we saw an area where we got very, very limited amount of supply, no supply candles, and then we made our move to the upside. So at this point in time, we're still seeing a decent amount of sell pressure come into the market. Let's just take a quick look on the 4 hour here. So we're seeing a little bit more buy volume come into the market. We do see sellers still have presence, but they're definitely taking a step back from where they used to be. So we can see that there's a significant amount right there, and then they're taking a little bit step back. Overall, we see a little bit more buy volume than sell volume within the potential consolidation going forward, and we will see how much volume we have if the market drops from where it currently is all the way to our main level of support, which is going to be right around here. So if I guess, and when the price does drop around here, we'll see what the sell pressure is. If it's not too much, that's great, because then it's volume accumulation, meaning there's more buyers than sellers in the market, which is a bullish indication. And then when the price, like we saw, break to the upside here, break to the upside, we're going to look to enter long and then take profits at the resistance here. Maybe leave a little bit, but at this point in time, I think that we're going to have our bias that the consolidation is going to continue, and we're going to see if it's a market distribution or market accumulation, because this is a downtrend here, and now we're in that consolidation. So we have to identify if this is either an accumulation, meaning it's a phase where it's sideways and then it's going to go up, or it's a distribution. And then we look at volume, we look at the price action, we look at the momentum, we look at different time frames, look at different exchanges for the volume, try to use as many tools as we can to analyze the market. But overall, we're just in a sideways consolidation, and we're going to treat it as such. We're waiting for the price to get to the lower half. Right now, let's say this is the consolidation. We're kind of at the mid-range zone right here. We don't like entering at the mid-range zone because we don't really have the wind against us. Let's say if this is a consolidation, the wind, if you're longing, is behind you, and if you're shorting, the wind is when you're near the resistance, because there's a lot of pressure, sell pressure at the resistance, and there's a lot of buy pressure at the area of support. So when you're in the middle, you're not really in an area where there's significant volume. You're kind of in a gray area. There's pressure from above, there's pressure from below, and you got a mid-range zone, yes, but you're kind of bouncing from zone to zone. But when you're able to enter at the low or high, like we're trying to do right now, well, then you have a much higher probability of being able to get that take profit you're looking for, and then that risk reward, and manage your risk, because you're not risking basically from zone to zone. For example, like let's say you're entering right here, your risk is going to be below the previous support if you're longing. That's a very, very long risk compared to if your take profits here, right? So your risk reward of 1 to 1. If you're trying to long here, risks here, take profits here, maybe that's 2 to 1. So just thinking about entries, thinking about why you're entering where you are, it's a good thing to think about. So now, in that said, we see support, support, resistance, support, support. We can make it a little bit wider of a zone like so if we really wanted to, but overall we do see the price is holding this descending trend line, and we're just going to see it hold until we see a squeeze, and then we're going to play that squeeze. And we can look for some day trades to the downside. We're not looking for shorts, we're only looking for sells, because we're in a downtrend. We're in, let's say if this is the support, we're in the area where price is going to the area. Why would we want to see, well, that's a really, really, price can't go opposite direction. That was a really, really poorly drawn chart. There we go. So price can't go, well, it can, but price is currently going further down. So it doesn't make sense to try to long this way when we have a higher probability of getting our take profit when we have an entry close to the lower highs, sort of like here. Yeah, that was price can't go back in time, only go forwards. So in that said, we'll then look at the smaller time frame on the 4 hour, and then kind of discuss where we currently are and what we could currently see, and then we'll jump to then the 1 hour chart to discuss that in even greater detail. So initially, this was our first descending triangle where we got our resistance area and our support area to be well respected, and that's what gave me the indication that we could get rejected there, and that's what we saw. And then once that got rejected, I was like, okay, definitely consolidation. We see supports, and then we see a validation second time that there is resistance at this zone. So looking at the smaller time frame, we see the anchor point right here. We see our first rejection, our second rejection, our third rejection, and we could count this one, we're probably not. And then we see the last rejection with just the wick above the zone, with the body still within the projection area. So we got 4 touches on that zone, making it a dependable area within the chart. So now that we know that, we broke to the upside like a lot of consolidations, and then we hit a recent market structure high. Like we can see, we were moving major lows. We had some climactic volume. We pulled up, and then we made a double bottom, validating this zone as a support. We then made a lower high, validating this zone again, and then another lower high, validating this zone yet again for a support. And then we connected the lower highs, and then we broke out because there was a squeeze in price. The price had to make a decision, either go to the upside or downside. This one chose to go to the upside. We do see increasing sell volume, and then that last candle there, just the sell pressure could not continue. And then we got a no supply, which is this candle right, oops, not that candle. It is this candle right here with that amount of volume, which has less volume than the 2 previous candles. There should be strong sell pressure trying to push the price down, but we see that there is a lack of sell pressure. We got initially a lot of sell pressure here, which carried a decent amount of sell pressure compared to the previous 2 candles, even 3 or 4 or 5 or 6, 7, 8, 9 candles on the 4 hour. So a while, that was a decent amount of volume within that time frame. And then the next candle had even more volume. We can see that right here, a significant. So we're seeing increasing sell volume, right, coming into the market, trying to push the price down. But what did we get? We got a massive rejection. The bulls were able to push the price right back up. Now I'm thinking, wow, that's a pretty major rejection from the bulls. Next candle, we get a no supply. So the sellers are trying to slam it down, and they're not able to. Attempt 1, right? Attempt 1, attempt 2, attempt 3. They're going to get tired sooner or later, you know? If you're trying to push something above a wall and it's not able to go up, you're going to get tired after trying to push for a certain amount of time. Same thing with the markets. They got tired, and you can see that with the no supply. The no supply got a reduction in the amount of supply, or the amount of weakness, or amount of pressure to the downside. And then we got a bullish candle right there, very bullish candle, pushing the price to the resistance zone. The next candle did resist it with just the wick protruding above the zone, and then the body of the candle was sticking below the zone, like so. And then the next candle shot up with strong conviction and confidence that yes, the bulls have control. And then we saw increasing buy volume come into the market, showing solid strength. And that's what we're looking for. So got a rejection, but basically we're looking for that same thing to happen somewhere around here. Let's just continue on with the story that we've had. And then we saw a decent amount of sell pressure come in for the first one here with the rejection. We do see a wick to the top here, showing that there is sell pressure pushing the price back down. And then the next candle was a pretty bearish candle here, pushed it back down. And then the candle after that, very, very significant bearish candle, but we didn't see that much volume come in with it. So the amount of effort it required to push the price down was not in a equal amount of relationship with the actual push down of the bar there with the distance. So then we got to push back up, and then let's just see here. And then this candle actually didn't get that much volume either, surprisingly. I'm talking about this one right here, just discussing it here, just in my mind before I talk about it. But then, okay, so we got to push down. So we're basically getting a lot of volatility around this zone. We know, because we got a lot of volatility around this zone, that this is an area of support right here. And looking back at the previous time frame, we can see area of support, area of resistance, area of resistance. It's a key zone, right? So we can see it's a mid-range zone that we're currently at. This means, like last time, we can see right here, if it does dump, we're probably going to have a significant drop right to our support zone. We'll see exactly what percentage that is, but I wouldn't be surprised, because right now we're creating a descending triangle. It's a high, a lower high, lower high. We could be forming a lower high, inevitably potentially moving to the downside because the momentum is to the downside. The consolidation is looking like it could make a move to the downside, and then we're going to get a nice move to the upside like we did in previous consolidations. So, in that said, I think we can now move to the 1 hour, because we've really discussed and understood what the outlook potentially will be for BTC here. So I'll just get rid of a couple trend lines. We were just assessing it on the 5 minute just for quick potential day trades, but ideally we're trying to get the good solid swing trades. So now on the 1 hour chart, we know we're in a downtrend. We talked about in the market structure. Let's just talk about what we see right now. So we made a strong push to the downside. This is that mid-range zone that we talked about in the 4 hour chart. So we held it once, and then this is that zone that we talked about within the Instagram post, that ascending trend line we could talk about on the 5 minute chart, but we were holding some nice higher lows like so, and then we were just holding some nice higher lows, and then it inevitably broke to the downside. We got a break in support, pullback, and then a sharp move to the downside. And then now we're testing this low yet again. And we did get a reaction from the bulls to push the price back up. And it's just a matter of if we're going to be testing this zone again. I think if we are able to test this zone right here, we have a confirmation with an anchor point here, 2 touches here, and then a third touch point. We have 4 in total, making it a dependable zone. And we also have a previous level of support turn into new resistance, creating a zone of confluence for us. So I think looking for potential shorts, this area right here would be a good opportunity because we see that the descending zone and the horizontal zone is in confluence with this area. We'd also want to see price action confirmation of maybe an ascending zone, and then when we break it, that would be a good entry, then stop loss above here. First take profit, second take profit, that would be a good potential trade for the downside. But let's zoom in here and actually just go to the 15. Usually I don't love going to the 15-minute chart, but I think on this one it makes sense because the consolidation is well respected overall, and we're just going to discuss different market structures and overall outlook that we could see. So at the end of the day, we're wanting the price to hit our demand zone here. So looking at the 15, we can see we could be consolidating for a little while here, so we have to remain patient. It's pretty hard to try to pinpoint exactly when it'll drop, so we might have to try to pick a high here and then just wait until the price is just consolidating and then it drops, and we'll just have to sit through a lot of consolidation. Not the worst thing in the world, but we'll see what it does right now. We did get a reaction at our zone of support, which is right around here. And then we're now getting the price to hold that low, although we are seeing the market drop a little bit right now. If we do get the price to come back and retest this high, resistance, support, I may be looking to enter because we see a resistance that is holding lower highs, and if we're able to get an entry around here, if I put my stop loss above the lower high, then if it breaks the market structure, well then I'm out of the trade, and then I don't want to be in that trade anyway because the market structure is changing. I'm looking for the downside. I'm looking for the consolidation move to the downside, and that's what I'm looking for. So initially, that's my first thought of an entry, is if we just get that push to the upside, that would be a first opportunity in my opinion. If you do push back up here, we could see a potential confluence zone with this area right here, depending on how the price reacts to this zone. We could be seeing the price come up even to this range here, like we saw in the past. You see a little consolidation, so we had a couple options. If we do enter here, I will want to put a stop loss above this zone, so if we do break above and then consolidate in this range, I'm not going to get stopped out. But if we do have the patience and if the price is able to, getting at the price to come, I think, up here wouldn't be a bad thing because we see a pretty key zone anchor point. We could put it up here, we could put it down here, but we see 1, 2, 3 rejections. So I think there would be some sort of lower high, and as long as we're putting our stop loss above the previous higher high right here, or the previous lower high, if you're just looking at the market structure, then I think we are safe. And then we'll continue the consolidation downwards unless we get a massive wick taking us out. Obviously that happens in the market. That's just unfortunate, but I would rather put a stop loss in compared to not put a stop loss in. And then, you get this and it stays there, well then, you're kind of fucked, to be completely honest. And especially if you're going to bet and don't set a stop loss, like that's pretty risky business. Especially if you are treating this like a business, that's not the smartest move in my opinion. But everyone has their way of trading. So another way that we could play this is if we don't get the price to come all the way down here, and if we see a bit of a consolidation, like we're seeing waves right here, if we see a bit of a consolidation, we may just get a flat out dump, because we've seen that before where we get the price to come closer and closer to a support, and then there's just no more volume left, and then we just get a massive dump, or no more buy volume left to hold it up, and then we get a dump to the downside. We'll see what it does. If that comes to be true, we probably will have some sort of descending trend line, and if we're able to see that validation a couple times there, we may look to enter and then put a stop loss above the recent high. And then that is not the highest level of confirmation because this is a descending triangle. we could see the price break to the upside because we don't have a confirmation of the support. Another thing you could do is actually set a stop limit order. So you could put your entry right there in between between the stop and the limit, so that the price does break down. You could have an entry right there. That's another option if you do want to play the safer bet. But a little bit more of an aggressive bet would be an entry hitting the resistance, validating it maybe as a double top, maybe with a bearish engulfing candle at the start of the descending trend line to the downside, maybe breaking a support, really small minor zone on the 5-minute as well. That would be some sort of confirmation. And if it breaks the descending trend line, well, then you get out of the trade. That would be your confirmation. But that's another way to play this price action. That's about it. If we do break to the downside and form a lower low, you could be looking for a potential lower high to get that nice potential move to the downside here. That could be another option with a stop loss at this zone. We'll see how the market structure reacts. We are wanting to see the volume. I'd like to see a very, very lacking amount of demand on the pullback. If we do get a pullback, I want to see that no demand coming in the historic volume to show me that there is a very, very limited amount in the market. So that's basically the overall outlook I have. Basically wanting to enter here. Ideally, if we hold this level of support, if we do break, potential entry here. Basically what we're looking for is the market moves in cycles, right? Impulse or pushes, and corrections, retests, pullbacks, exhaustions, whatever you call the pullback. I call them all those. Pullbacks, exhaustion, retests, and that's how the market moves. Might not be a perfect situation, but it moves in waves. It's not point A to point B, perfect straight line. That's not how the market moves. So what we're looking for is we're wanting to enter at the completion of the exhaustion wave before the next impulse wave or push wave. So we're looking to see if it's going to pull back here, because this is a push driving the price to the demand, and it's a pullback because it's a completion of a push, because we got to push to the downside because we broke a key zone, which was right here. We've been holding it for a while. We got to push to the downside. We did get a minor level of a retest right here. So we got to push, pull back, push, and then this is our second attempt of a push, and then we're going to getting our pullback, and then the next attempt is going to be a push. If we don't break it, then we might be consolidating for a little bit, making lower highs. Obviously, it's still pushing to the downside, but if these couple pushes don't occur, then I'm going to assume that we're going to form lower highs and kind of consolidate a little bit, and then it's just a matter of we're going to break to the upside and then retest this zone like so, and then we could get an entry here, stop loss here, first take profit, second take profit, or we would be looking for a break, pullback, and then a next impulse push to the downside, which would look all right as well. So we'll see how the price action looks. At this point, we're not going to really take any entries at this moment. So let's go back to the hour chart. Already discussed the market structure, and then we'll be going into the trades we currently have. So Hassan said, if someone already has done a short at 8,800, what would you do right now? So 8,800 would be right around here. So let's just put a horizontal zone at 8,800. So they put it. It's pretty good, actually. I'd say that is a good entry. So let's just say that you entered right here. I would say a decent stop loss would be above this zone, 88.60, or if you're being a little bit more careful, 89. And then you'd, I think, like to see the price break out below this level of support. You know, you got a risk reward basically 1-to-1 if you are taking any profits at this level of support. If you do think that the price is unable to break this zone, like this is a descending triangle. So if you see the price continuing towards the apex of the price action pattern right here. And if you see it start to break above, and if you don't have a lot of confidence that it's able to break this support, then maybe scale out at a risk reward of 1-to-1 may work. But ideally, if you were to see a break below that zone, I take profit of 85 or 84.50 or somewhere around there. I think would be a much better scenario for you to take your profit in, because we see that it's a key level of demand that we've held in the past. So looking at if I was entering right there, I didn't like if you were I entered, or where you entered, I lost at 89, and then a take profit at 85 would be a pretty good scenario. You get a risk reward of 2.8, which is great. Anything over 2.5, I'd say, is solid, and then 2 is kind of the minimum that we're looking for ideally. There are some cases where we'll take something less if it's not able to push down or up, or obviously trading is somewhat of a case-by-case basis depending on how it looks, but that's how I would play it if I entered right there. We did have an entry on XRP. We got stopped out, and then it slammed down, so it was really unfortunate. I was basically looking at this, looking for something like this to occur. Shit happens. That's unfortunate, but that's okay. I'm actually thinking about potentially just trading more of BTC, because I'm getting wicked out in some stuff. I'm getting some alts to break one way, and then when BTC does inevitably go towards the intended direction, I get stopped out, which obviously is not fun before it goes in the money. But we'll see how it goes. I might look into Bybit again. I didn't mind that exchange. I'm basically using only Binance right now. So no more rambling. I'm going to get on to the tools that we are currently using to assess the supply and demand. So right now, we're just seeing a very, very significant lack in both the buyers and sellers in the market. We already talked about this yesterday. We're seeing that the buyers are not really gaining any margin opens, or there's no real buyers opening positions on margin in BTC on the Bitfinex exchange. So we see a consolidation zone right here, so we could see that again, but at this point in time, we don't really see anything that indicates that we could see some more momentum to the upside, or at least a consolidation like we saw here. So if we do see a consolidation where we hold a nice level of support, we see some hesitation, then we can say we're potentially in a very large range where we have resistance and we have support. But right now, we are still in a momentum to the downside, and we don't really see much support here get held yet, but we still got a little bit of space before we do see the necessary indications for support in order for us to look for a potential range or double bottom that we could be seeing. On the short side, we don't see that much short positions opened on the BitMEX exchange either. Really not at all. We're at basically the lowest point that we've seen in a while, giving us an indication that the sellers don't have a tremendous amount of control. They can push the price down. There can be fear driving people to sell, obviously, because the market has been trending higher. A lot of people have bought in, but there's no real sign of a short squeeze opportunity, and that's something to keep in mind. It has to be from the buyers originating the pressure. It can't be from the sellers getting worried about losing too much money, and then there's a short squeeze that kind of creates that exponential price increase, whereas pressure from the buyers is a little bit more healthy instead of kind of like this in most cases. Like we saw, this was your short squeeze where a lot of people got margin trades got taken out basically in July 2019 when we got the price to hit 14K, and that was kind of a parabolic move, and now there's not a lot of people shorting the market on margin, so we're not going to get that kind of move. So we're probably going to get something a little bit more healthy, which we have been, which makes sense with the overall outlook of the shorts. So now for our last analysis here. So on the 24-hour time frame, we can see it's pretty well even. 50.5 for the shorts, 50.5 for the shorts, 51.7 for Bybit, but basically it's even for the 24-hour time frames, a little bit slightly more towards the short side, but not much. On the 1-hour time frame, we see that it is actually more towards the long side by somewhat of a decent amount, almost 60% on BitMEX for the long side, 53% on Binance for the long side, and 58.6% for the long side on Bybit. So definitely a little bit more weighted on the longs for the short side, and pretty well even for the 24-hour time frame. So we'll see how it goes. That does indicate then, looking where we are right now, we could see another test of this zone, kind of this area here, which could be a possible short opportunity again. So if we do see the price come up to this area, I will be interested. I will be looking for opportunities in the market. Hassan also said, I am also tired of alts trading now. I am mastering BTC chart. Yeah, I like alts in most cases, but within consolidations, when BTC, like for example, this is just basically BTC market update is done. I'm just going to be kind of rambling about yesterday and kind of answering questions here. But Link, we were looking at Link for a while, like very, very closely. When we were saying we want to enter here, but we didn't see BTC break out. BTC was looking a little bit bearish actually, so we didn't enter. And then bearish, the bearish indication actually came true, but only until after Link made a huge move to the upside. So unfortunately, we were unable to capture this. So I'm thinking, I don't want to just completely take away alts. I really like trading alts, but there have been many, many cases where I look for BTC as an indication, but it gives me false signals where I don't enter alts, or I enter alts thinking that BTC will go down like it did, and then XRP spiked up before moving to the downside. Like we can see right here. This is the trade I was in yesterday. Entered at this consolidation, was waiting to enter more once, we were able to push down. We got a pullback, very, very all right. Once we went above this zone, I took out my stop loss, and then we slammed down. We were trading BTC. We did see a pullback, but it wasn't to the high, so I personally wouldn't have been taken out at that point. And, shit like that happens. That's totally a part of trading, but I do agree with you that if I was trading BTC, everything in my plan, everything that I would have been doing at that point in time would have been perfect, and I would have had a nice entry there, and it would have been in the profit. But unfortunately, we got taken out of Link because of that small push up. And it inevitably went back down, but can't win them all. If I do sell right now and do short at 88, how does that sound? Well, if you've already shorted at 88, in my opinion, it doesn't make sense to take 0.86% profit and then have to re-enter at 88, because with spread and commission and fees, you're not really making much, depending on what your risk is. Depending on your leverage. If you leveraged 5 times, obviously that's a significant amount if you were initially risking 1%. But if you were risking 1% on the actual chart, then obviously it's a risk reward of less than 1, which is not optimal. So totally depends on what your initial risk was set out to be, because then I can assess what your risk reward is, what you would be looking as a drawdown if you were to hold if the price did come back to 8,800. So yeah, I don't exactly know. So I think that is the completion of this BTC market update. It looks like we are seeing a little bit more buy volume here. We're seeing another trend line come in. We did see a trend line right here. We did not trade this because there was a level of support right there, but theoretically, 0.8% move. The thing with day trading and high leverage, like if you were trading with, for example, if you made a 1% move there, let's just say for simple mathematical sake, 5 times leverage, but you're leveraging your fees as well. And if you're trading often, you don't want to rack up on fees. So it's imperative that you have sufficient capital required to not need over leverage. If you're leveraging 10 times, that's way too much. You're going to rack your fees up significantly. Looking at a smaller fee structure of, let's say, 2x or 3x max, I think is the best way to go about trading, unless you are all right with the higher fees because you know that you're still able to make a significant amount of money. It's just the cost of doing business. Obviously, it's just something that you have to pay that allows you to enter and exit the market and use their services. But there's a positive and negative as well to it. But I've been thinking about it, especially within the consolidations, because for a swing trader, you could look here, and that would definitely be a swing trade. It'd be maybe 1-2 days if you were entering a short here, and if it broke down to the lows here, you could be looking at 2 days until it broke to the upside. But that was the potential opportunity, unless we come back for a test. Whoa, got a lot of volatility there. Unless we come back for a test here, that's basically the only short opportunity I'm kind of seeing in the market right now, because on the 5-minute we can see there's a little bit of an ascending trend line. We could probably just if it does hold, probably put it to here or something. We don't exactly know, but it'd be nice to see the price come up to the 8,700s. So I'm just kind of doing a live here in terms of just continuing on, because we do see the prices at a pretty interesting level. But I will cut it off because we're at 43 minutes, and we'll probably just do a live day trading session like we've done in the past, where we just look at BTC. Don't know if I'm going to do the idea of just trading Bitcoin, but I think I will be a little bit more selective with the alts I do trade, because I have been trading more alts than Bitcoin, which in some markets are great because the alts tend to just move more aggressively. And if you're in a bullish market, alts just tend to move more aggressively to the upside than BTC does generally. And you can find great sympathy plays, but in consolidations, it's definitely a different story. I get wicked out looking at the trades that I've taken in the past, looking at different months. I can definitely see that I get taken out and I kind of get slaughtered in the consolidations when I'm trying to create sympathy plays with alts because they're a little bit more volatile. They'll have that wick to the upside, that downburst before a strong move to the upside, and I'll inevitably get taken out. And I see that the directional bias is there, but it's just the volatility that sometimes gets taken out in a sense. And BTC, I guess, has a little bit less of that within the market structure, or because I'm not looking for sympathies, I'm trying to trade the underlying asset in a way. Kind of makes sense. So I will quit this YouTube live. Thank you very much for watching, and until next time, have a good one.